Hey class, today let us discuss the cash book. Cash book is a book of time entry, and the cash book also is a ledger. Today let us begin a single column cash book. My cash book is used for recording cash transactions that result into transfer of money within the business or between the different businesses. It is the book in which cash and the bank account are placed. Record all cash receipt and the payment. Act as a both record for cash transactions, a primary record for cash transaction, but it function as a journal because primary entry and also a ledger. Every entry here is later posted to the appropriate ledger account. We have a type of cash book. We have a single column cash book that we will be dealt in today, and the double column cash book, and the three column cash book, and the cash. So these are type of cash book. But a single column cash book is used to record a cash or bank transaction made by the economic entity. Unlike other type of cash book, the single column cash book will record cash transaction or bank transaction at a time. The specimen of a single column cash book, cash account and the bank account. So both have a debit side. Left hand side is the debit side, and the right hand side is the credit side. So it maintain a column for date. It is following amount for both cash account and the bank account. Let us use one example to illustrate how this can be done. Record the following transaction in a single column cash book of Makaranga and they complete the double entry. So we have Makaranga started a business with the cash in hand, 1,500,000. Open the bank account with cash, 500,000. Purchase goods for resale by cash, 700,000. Paid rent for the shop by check, 130,000. Sold the good and received cash, 425,000. Banked cash into bank, 200,000. Paid transport of goods sold by check, 50,000. Bought furniture for office use in cash, 360,000. Purchased the good for cash, 425,000. Cash sale for the day, 700,000. Paid salary to salesman in cash, 260,000. Sold the good for cash, 580,000. So these transactions are to be recorded separately. Those transactions that are cash basis will be recorded in cash account. Those coming from the bank will be recorded in the bank account. So in a separation of these two accounts, we have a capital start in the cash, be debited in the cash account, 1,500,000. Again on 2nd January, open account and deposit some amount. So this will be credited in a cash account and being debited in a bank account. So debit bank account and the credit cash account. But again, we made the purchases. We made the purchases on cash basis. So we credit that 700,000 and the corresponding amount we got purchases account. Later on 15th, we make sales 425,000. Then on 16th, we banked 200,000. So these are being credited in cash and also being debited in a bank account. Also, on 16, the other thing on 21, we make a purchase of furniture 360,000. On 25, we make a purchases for 25,000. On 27th, we make a sales of 700,000. On 29th, also with salary 260,000. Again, on 30, we make sales of 580. So in this case, we make comparison between the debit and the credit side. So here, the debit side is greater than the credit side. So we took the balances as 3,205,000, and the balances become 760. Again, on the bank account, we had few transactions. We opened that account on 2nd January with the cash 500,000. We make a payment of rent 130. 18th, 16th, we deposit also 200,000 cash. And on 18th January, we make a payment of transport charge. And those are only transactions that affect your bank account. So we had a balance of 500 to 20,000 only. So this become a balance as by February. So in a cash account, we have 760,000, and on balances in the cash account, 520,000. That's marked the end of